You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back for the first time here in the new year of 2023 with the Crypto Rundown, the program here on the Options Insider Radio Network, where we go above and beyond, move a little bit farther past our traditional stomping grounds of your Apple and your Tesla and your SPY and your VIX options, and go a little bit further afield, see what's going on out there in Bitcoin, ETH, other major crypto assets. Going to talk about the skew, the volatility, the open interest, unusual activity, a whole bunch more than that. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned Options Insider Radio Network. Right off the bat, I want to thank all of you out there who helped contribute to making 2022 just a record year by just about every way you could slice it here on the network. And we've been doing this for a while. This January marks our 16th anniversary. Yes, it's hard to sometimes say that out loud. It sounds crazy, but we have been doing this for quite some time. Kicked off with the first Options podcast way back in January of 2007, and lo and behold, it has grown and evolved into this entire network that runs the gamut of many different assets, including crypto. So thanks to all of you out there who've taken the time to listen and, of course, rate and review over the course of last year. It really does help all the new folks who are continuing to discover the network and indeed the program every month. And of course, if you folks want to go above and beyond, it's not enough to have the nearly dozen programs we're coming out with on the network all the time. You want more in your lives. You want the exclusive pro podcast feed. You want, of course, live access to this and everything else we do on the network. Great giveaways and a whole bunch more. Theoptionsinsider.com/pro is the place to go to access all of that as we kick off the new year with our first crypto hot seats for 2023.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone. Welcome to the Crypto Hot Seat segment, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And today's guest is a newcomer to the program and indeed to the network. We thought, why not kick off the new year with a brand spanking new guest? We are joined now in the hot seat by Mr. Christoph Gugelmann, the founder and CEO over there at Tradeteq. Christoph, welcome to the crypto hot seat.
I'm here. Sorry, Mark.
There we
I don't
go.
know what happened.
We lost
Happy
you.
New Year.
The magic of beaming technology all the way across the pond. Sometimes things don't work. You think by 2023 we'd have mastered such things as this, but you know what? Sometimes that happens. Well, Christoph, welcome to the Crypto Rundown program and indeed to the Crypto Hot Seat. You have pride of place. You are our first guest for the new year here, sir. So welcome to the show and indeed to the network.
Thank you so much for having me.
And Christoph, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto space, as well as what the heck it is you folks do over there at Tradeteq.
Yeah, with pleasure. So what Tradeteq does is it transforms private debt and real assets into securities in a really traditional form and allows institutional investors to automate their workflow processes and interact with asset sellers. So in a way, this is just traditionally, where Tradeteq came from, it's doing something very traditional. And because private debt, such as infrastructure lending, trade finance, mortgages, consumer lending, etc., very often needs that repackaging. We also, in 2022, we morphed into also a tokenization as a service infrastructure. And we are allowing to repackage these private debt and real assets also into tokens.
A very fun, a very hot, a very contentious area of the crypto space these days, tokenization, a lot to unpack there. Let's start with the process. This is intriguing area of the space, bringing in your case, private debt, but you have expanded it now. You can bring on pretty much any real assets you want. How does this process work? Someone comes to you, let's say they have debt they want to offer on your marketplace. How does this whole process work, Christoph?
Yeah. So if you are a bank seller, for example, let's assume you have, 100,000 invoices, and these invoices continue to revolve. They're no longer it's no longer the same portfolio next morning because, always invoices pay back, and then there's a new set of invoices coming into play. So what you need is a way to extract these instruments from a bank balance sheet. You need the full workflow process, and then you need a repackaging infrastructure that allows to bundle and pool, these instruments such that they then can be tokenized or securitized if you go down the traditional route. And Tradeteq is pretty much agnostic. Obviously, we are very excited about tokenization because we believe that this will be the future for many reasons. But still, we have to appreciate that most institutional investors are still very much, in the securitization space. But the underlying processes will not change in what we provide today.
And what's the turnaround time if I approach you and want to bring, let's say in your example, these invoices and bring them onto your marketplace? How long does that typically take to get them up and available on your marketplace?
Yeah, so what we do is we are onboarding asset sellers, and then we get them trading ready. So that means we make sure that they have all the KYC, AML, and all the onboarding done with the various service providers that are required. And then once that process is concluded, and we have also done the digital integration with them, which obviously now can be done through APIs in a very easy way. Then the partner, the seller, is in principle ready to trade. You of course need to find an investor on the other side. We have a marketplace that can do that and offers the introduction. But we also have some of the largest institutional investors that are working with us. Last year we have done in excess of 2 billion notes outstanding. So this is not tokens yet. I hope we get there soon, but these are traditional notes. And And then once the two sides kind of connect and they negotiated the transaction over our platform, then everything thereafter can happen within 24 hours. And then once the token or the note is issued, the underlying instruments, they just kind of like auto revolve based on the instructions that both sides have agreed.
And you mentioned doing over $2 billion worth of debt last year. Is that still the primary asset class? Is it debt, or are you starting to expand into other assets as well?
Yeah, so private debt really has, of course, has all these various flavors, and they're all very different. So we started with trade finance, and if I mentioned 2 billion of outstanding, that means someone invested, in aggregate, several people invested that amount. Obviously, the underlying instruments in trade finance are very short term, so they kept revolving. So we processed more than 30 billion of underlying instruments that revolved within those 2 billion. But then we have already done some infrastructure financing. We have done also direct lending transactions, and we are really now focusing on providing a holistic private debt infrastructure. We have done also natural resources. So we repackage natural resources directly. So it's a really flexible way of delivering these assets, and we are transforming them from something which is very hard, to transfer. They're barely tradable into something which becomes highly tradable and very standardized on the other end.
You mentioned that tradability too. It's one of the interesting roadblocks we've seen to widespread adoption of blockchain tech, which is of course what you're using over there in the financial markets, is that scalability. Here in the U.S. domestic options markets, for example, we put up over 10 billion contracts last year. It was a record year, close to 10.5 billion. So we've yet to see a lot of applications for blockchain on that scale because it just can't handle that amount of transactions yet. The transaction processing per second or per minute there on blockchain still isn't quite there for a lot of the major markets. So does that concern you as you're going forward? Maybe that blockchain isn't quite ready for prime time for some of these more active and engaged markets here, Christoph?
Yeah, I mean, scalability is obviously is key, and always keep in mind, we had various, kind of amounts of, but up to 2 trillion or whatever of crypto. But the real financial markets, the size of the market is so many times larger. I think there is 450 trillion worth of financial assets out there that could, in principle, be tokenized. And I think if something kind of start to move, and I will tell you in a second why and when I think it will start to move in the regulated space, then I think it could go very quickly, and the scalability is definitely an important issue. Also, I think the chains, there is larger and smaller chains, the interoperability. There's still a lot, to be developed. But by and large, I think the roadblock that we had in the last 2 or 3 years was around regulation. It was uncertain, what counts as a security and what counts as a utility token, and how these other tokens kind of classified. And the MiCA rules in Europe have created a lot of clarity around this. I think in the US, even out, it's anyway a security. So for securities, that works in principle. But the challenge now is the secondary market. You wouldn't want to hold an infrastructure token that you cannot sell for the next 17 years, right? Regardless of what I'm going to promise you in terms of yield, you want to be able to sell that in a secondary market. And there are still some challenges that need to be overcome. I think they're all addressed. Many markets have also put the right frameworks now in place. But by and large, you need to be able to have a secondary infrastructure that can also clear away from the traditional clearing systems, because the traditional clearing systems, such as the central security depositories, they obviously being made redundant through smart contracts. You don't need them anymore. But since the credit crisis in 2007-8, that's what the market essentially has decided need to happen. And now we are creating those areas where suddenly there are sandboxes that arise and exceptions that are made such that smart contracts actually can replace these traditional old clunky central security depository infrastructures.
Well, it's interesting you bring up regulation. That's the other roadblock I was going to bring up as well. Obviously, whenever you mention tokenization of anything, the regulators start peeking in, and it has been a bit of a dicey prospect here in the U.S. You kind of mentioned a little bit more clarity over there in Europe. So it sounds like you're not too concerned going forward about the regulators smiling on the tokenization process going forward, Christoph?
Yeah, I think it's absolutely unavoidable because it's the tokens provide huge value. 24/7 clearing, fractional ownership, democratization to access. It's something that you could not get through the more traditional clearing systems. Right? So if you take any one of the big clearing systems today, who has access to them? Not you and me, but maybe one of the largest funds will have access through their banks. And those, that hurdle is quite substantial. So smart contracts can provide something incredibly valuable. And I think there's just no way, this is not going to happen. It just makes so much sense. It saves costs. It creates real-time processes. It creates transparency. And I'm very convinced that we are heading quite quickly into that world where securities start to become tokenized, better accessible, where we build secondary exchanges. They are there, but they still have quite low volume at this point. I think that's starting to increase as we have more clarity around, the elimination of these clunky, old clearing systems that we currently have.
I like your optimism, Christoph. I hope you're correct. I hope you are correct. I'm cheering for you here.
Me too.
But other obstacles that have kind of popped up recently, very recently, of course, obviously you guys over there at Tradeteq are trying to get a lot of institutional clients to come on board and utilize your marketplace and offer their trade finance and their debt as products on your marketplace, and kind of embracing this underpinning crypto technology, aka blockchain, to power this going forward. But of course, post FTX, we've seen a lot of people recoil a little bit from anything crypto related, including the technology. I'm curious, from your perspective in the last couple of months, what kind of feedback have you been seeing? Are you seeing maybe institutional customers, are they a little bit more reticent to adopt this technology in the wake of the fiasco that has been FTX, Christoph?
Yeah, absolutely. And every new innovation has to go through different phases. And I think it wasn't different, in anything else. Human mankind has invented things blow up. But I think you're absolutely correct. So the security tokens, the regulated security tokens, is a security. It's just delivered in a different form. But it doesn't quite attract yet the pure crypto investors that obviously were used to fantastic returns that haven't really proven always right, particularly in recent days. And then on the other hand side, you have the more traditional investors, and they're not quite, kind of ready to experiment with different clearing systems. So this, I think, is the challenge. But I think it's unavoidable. And once a critical mass of investors start to understand that there is no freebie, right? There is no, you can't just have a risk-free 20% if you pay on your mortgage on the other hand side 4%. Doesn't make sense, where is the rest coming from? So as kind of like the market, I think, gets used to more realistic returns and maybe less speculation, or also start to understand the risk with the speculation, I think that more people will come in and they're going to actually be happy with maybe 8%, 10%, in an infrastructure project, delivered in a token. And I'm quite sure, 2023 could be the year where we see much more happening in this space.
Obviously, you're clearly focused right now on bringing those institutional investors and asset owners onto your platform going forward. But we obviously have a lot of active retail in our audience as well. Is the plan going forward to maybe expand the platform so that some point down the road you have enough liquid products available there so even our active retail listeners can come in and sign up and maybe make an account at Tradeteq, and maybe they want to buy a token on some corporate debt? Is that going to be the plan as well, to expand it to all comers there, Christoph?
Yeah, absolutely. Look, we have last year, we have made a test balloon with a kind of like a token that is called Tradeteq token. And that is issued under a prospectus in Europe, retail prospectus. So anyone who wants, kind of invest $100 upwards can participate in a diversified and insured trade finance portfolio. That is the first, that hasn't really been available. So far, you have to come with 5 million, 10 million as an institutional investor. It's actually, we have already done that. I think the one challenge I would mention to this is because it's more regulated, and in absence of having these large secondary trading venues where you already have, I don't know, hundreds of thousands or whatever different investment opportunities. If for every single opportunity you have to go through an onboarding, which costs you $40, $50, then it's quite a challenge, to invest in, spend $50 to invest in $100, where you're not going to make more than maybe 5 to 10% of return. So I think that's still a bit the bottleneck, but I think we're getting there. The US exchanges, they slowly grow. There's a lot of exciting stuff coming on there, and I'm pretty convinced. We'll see exchanges with a few hundred different investment opportunities. You onboard once, and then you can purchase as much as you want.
Yeah, and Christoph, I like your optimism. It sounds like a fun future. I like it. Well, Christoph, I appreciate you joining us here for our inaugural Crypto Hot Seat segment for the new year of 2023. Before we go, you kind of just laid out a very optimistic roadmap and a very optimistic future. I hope it all comes to pass. But if you want to leave our audience with any hints, any teases of what they can expect coming down the pike from you and the team over there at Tradeteq, now is the time, sir. The floor is yours.
Oh, thank you so much. Yeah, look, I think what's going to happen is we have focused a lot for European investors. The next stop for us will be to do the same thing for US investors. Issuance out of Delaware will also make sure that it will be tradable on a secondary exchange. So that is really what 2023 will have in store from Tradeteq.
There we go. And if folks want to learn more about everything you're talking about here, Christoph, where should they go? What should they do?
You could always have a look at our website. So it's www.tradeteq with a Q in the end, .com. And if you want to see as well what we have done in Europe, there is a webpage called xdctech.com, and it shows you all the prospectuses, white papers, etc. of this retail token that we issued last end of last year. So it gives a wealth of information and describes exactly how we do it.
There you go. Learn more over there at Tradeteq, TRADETEQ.com. As now it's time for us to keep on rolling into our first Bitcoin breakdown for the new year.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everyone, welcome to the Bitcoin Breakdown segment, the portion of the show where we do just what's said in the title. We break down all the action in the world's leading digital asset. Of course, we're talking about the big dog, which is Bitcoin. Remember, we've been off for a few weeks here now towards the end of the year. Of course, don't blame us. Blame the holidays over there, conspiring against the crypto rundown all the time. It's a Monday show, listeners. Sometimes it feels the ire of the holidays the most. So we've been off for a few weeks here, but Bitcoin coming into Showtime, giving you maybe a little bit of an early New Year's present here, a little bit loftier than it was on our last show, which was on December 12th. That time, Bitcoin was just a hair above 17,025 to be precise. Coming in to start of today's show, 17,322, so almost exactly 300 handles north of where it was this time a few weeks ago. Of course, in the intervening period since our last show, we did see a little bit of a run in Bitcoin. It actually got as high as 18,227. That was back just a couple of days after our last show on December 14th. And then it dipped towards the end of the year when it seemed like everything was turning red and no one wanted to hold anything going into the end of the year. Bitcoin dipped down to about 16,404 on December 30th. So the last, at least official trading day here in the U.S. Crypto, obviously a different beast, trading 24/7 out there, but still. For those of you out here in the U.S., most of you called it quits there on Friday, December 30th. In terms of vol, what did we see going on out there? We saw a decent range over the course of the last couple of weeks, but as with a lot of asset classes coming into the end of the year, we mostly saw people taking breaks, taking steps away from their trading screens, and volume kind of lightened it up a little bit, and also vol followed suit as well. And that was pretty much the case in Bitcoin as well. 54.5 when we kicked off our show on December 12th. Coming into today's show, 42. So down 12.5 points. That's a pretty big move for Bitcoin vol. It's also, if you've been following this show or just the crypto space as a whole for any length of time, that's starting to get pretty low for a Bitcoin vol perspective. This is the asset class that for years was synonymous with volatility. You mentioned Bitcoin and the next word out of your mouth was often volatility. There's shows that made running gags and punchlines about how volatile Bitcoin was at least perceived to be. Sometimes it can get up there. Usually it's not quite that high, but still frothy. A lot frothier than most of our other asset classes we talk about here on the network outside of, let's say nat gas and lumbers. By the way, if you want to break down for what were the most active, the most volatile, the biggest movers and shakers across all the asset classes, not just crypto, check out our end of year TWIFO episode where we broke down all the assets and, of course, did an interesting deep dive into correlation for Bitcoin amongst the major assets. Is Bitcoin digital gold? How does it stack up against the equities? We kind of debunked some myths over there, which is kind of fun because we didn't get a chance to do a big end of year crypto rundown show. So we kind of squeezed it in over there on the TWIFO program. So make sure you check out our end of year surprises and fun top trends and trades episode from the end of year for TWIFO. Because we do spend a lot of time talking about crypto there. That said, we'll see if we can squeeze in our schedule the next couple of weeks. So you can squeeze in a kind of best of or look back at 2022 episode for you folks as well, because you deserve one here on the crypto rundown as well. Skew wise, what's going on with the skew? It's kind of gone the way of the dodo. On our last show, it was still hanging out somewhat negative, about a -4, not quite that negative, not a -25 or anything like that. -4, just slightly negative. And coming into start of today's show, it's almost flat. It's about a -0.7. So a lot of that bid, that premium to the puts has kind of evaporated, which shows you, at least for now, crypto markets, they're kind of hanging out at a bit of an equilibrium. They don't really have a big bias in one direction or the other. Now you start moving farther down the term structure, that's going to change a little bit. But we're looking at kind of the average 30 to 20 delta skew across the board there on Deribit. That kind of shakes out as flat right now. Now remember, one of the big questions we had coming into the end of the year, because we saw this last year on ETH and in Bitcoin, we saw a huge amount of OI roll off the board with December expiration. Kind of wondering if we're going to see the same thing this year and what ramifications that would have if we did. And the answer to the first part of that is yes, we saw a lot of OI roll off the board with December expiration. In fact, right now over there on Deribit, Bitcoin has always kind of hung out right around 2-to-1 calls over puts. Right now, it's almost exactly 2-to-1. It's 121,000 calls open. That's down 48,000. That's getting pretty light on Deribit. And the puts, exactly 60,000 open. That's down 32,000. So we're still pretty much at exactly 2-to-1. It is fascinating, but a lot of OI coming off the board there with December. Where did that OI come off the board? Let's find out. Let's look at the top open interest positions, the size positions that are open right now in Bitcoin options. Let's break down the top 5 of them right now. You'll see a little bit of evolution here as well. Number 5 in our top 5, we have the 21,000 strike. That's a newcomer. Haven't had that one in our top 5 in a bit. That's got 8,500 contracts. That also shows you When only 8,500 contracts is enough to break into the top 5, you know things are getting kind of seasonally light out there. Number 4, we have the 18,000 strike. So again, with 9,100 contracts open, again, that is a newcomer to the top 5. So our bottom 2 here, both newcomers here. And we're getting some shakeups at the top as well. Number 3, we have the 15,000 strike, 9,700 contracts open. That's down a whopping 2,600 contracts from our last show. So that one of our biggest losers. You'll see what our biggest loser is in a minute. Number 2, we have the 20,000 strike. That was number 1 for us for a long time. That's down to number 2 now with 10,800 contracts open. That's lost about 1,500 contracts since our last show. So a fair chunk, but not wiped off the board. It has actually been supplanted ever so briefly, ever so meagerly by the 17,000 strike. That has 10,900 contracts open. So a whopping 100 more open there. That one only lost 500 contracts since our last show, hence its ability to kind of slide up one notch above the 20,000 strikes. That's our top 5 now. Interesting bit of shakeup over there. I said we're hanging out at right about a 17,300 right now. So nice to see the at-the-money strike actually topping the list of open positions. We don't traditionally see that in crypto. We traditionally see a lot of, shall we say, outlandish stuff. And we also saw that in Bitcoin as well last time. Now a little bit of a shakeup. Most of these strikes are pretty close to the at the money. The one that was knocked out of the top 5, one of our big positions for quite a long time, kind of got cut down to size now. Got cut pretty much in half. Was the 30,000 strike. Notice you don't see that anywhere anymore. That was one of our most sizable and also most outlandish positions that was still a regular participant in our top 5 out there. That had nearly 14,000 contracts open as of our last show, 13,600. Well, no more. I got cut pretty much in half, down to 6,200. So I think we're going to see that theme across the board here. A lot of the, shall we say, optimistic, outlandish, call it what you will, far out of the money upside paper going the way of the dodo with December. And then folks, for a variety of reasons that are probably obvious to you, not exactly in a hurry to go out and reopen it yet. So 30,000 strike going the way of the dodo here. But now we got 17,000, 15,000, 18,000, 20,000, some strikes we can sink our teeth into here. It'll be interesting to see how these positions move and evolve as the year goes on. Right now, in terms of since our last show, what was the most active day we saw? And again, end of December, beginning of January, not exactly usually your most active periods on the calendar from a volume perspective. And that was the case now. The most active day we saw was actually January 6th, an inauspicious day here in the U.S. and a 2-year anniversary here. 31,600 contracts going up then. It's decent. It's actually busier than our last day we had, which was December 9th. That had 27,000 contracts. But you go back just even to November, you had 58,000 contracts, 113,000 contracts on that ignominious show we did on November 8th, right when all that FTX madness was breaking. And then, of course, even back to October, we were regularly doing 50 to 60,000 contracts. So 31,000 is not nothing, but it's also not something to really write home about. Speaking of writing home about things, you know, something we haven't been able to do for a while, if you've been listening to our TWIFO program, you know this is the case. We haven't really been able to really sing the praises or really even sink our teeth into it to any sizable degree of the paper going on out there on the CME crypto front. You know, they've been trying. They've been adding new products, trying to get more bite-sized stuff available for you folks out there. And for whatever reason, it hasn't really been resonating. You can go see this for yourselves, cmegroup.com/TWIFO, TWIFO. That's the place to go. And once you're there, just select the cryptocurrency tab from the drop downs, and you will see all that fun awaiting for you over there, such as it is right now. There were quite a few times where we saw a lot of action going up in the micro products. Certainly in the futures, they were always pretty active. And again, in the options, the big Bitcoin options started to percolate towards the end of last year. Remember, this is a product that has struggled to gain any traction for years, ever since it was listed. And part of the reason is the margin. Part of the reason is it's just an unwieldy contract. It's a 5x multiple contracts, and most people and most funds, it's just out of their range, so they don't want to touch it. So it took a while for it to grow, but towards the end of this year, it seemed like it actually got a little bit of traction. In fact, the last trading week, last week, they put up nearly 2,000 contracts. That's a pretty active week. So intriguing stuff out there. We're actually starting to see some spreads and other things like that, which is always fun. This week, obviously, starting of the week, so not a ton of paper on the tape, but still 300 contracts already just today. So There was a time not too long ago, and that was more than we would see for a couple of weeks out here. Add them all together, you wouldn't get 300 contracts. So seeing 300 contracts going up already today, including looks like 121 of the Jan 18,000 calls. Intriguing. That's actually a pretty sizable print. Looks like maybe we have a bit of a straddle going up as well. 40 times the 17,500 straddle. 40 times. So intriguing. A little bit of paper flowing in there for the beginning of this week here out there. So maybe we'll see a little bit of action out there on the big Bitcoin front. Unfortunately, not seeing the same level of interest in the micro products. You know, the products CME launched to try to get you folks, the retail folks, trading on their platform. 59 contracts last week and a whopping 46 so far today. It's looking a little bit better today, obviously, but still, again, going back to margins, one of the most frequent complaints we hear about these. Still not lighting the world on fire. Let's see what's lighting the world on fire out there in Bitto land, though, listeners, because this is a product a lot of you know and love, very near and dear to your hearts. For many of you, it's your surrogate for the crypto market in your securities account. This is the way a lot of you trade crypto and indeed options on crypto right now, because it is one of the most liquid crypto denominated names out there from an options perspective, certainly for US listeners. We were talking about Mara today on the option block. That name kind of popping up, that one and Riot back on the radar. It seems like some flashbacks to 2021 there. Those were two that were very popular in the meme stock era. But outside of those, and those are of course pre-Bitto as well, not that Bitto exists, the use case for a lot of options traders and investors as a whole as a proxy for Bitcoin is less if you can go out and buy Bitto directly. So Bitto, as of the start of the show, 1140, I was up about 40 cents. It's like it's given some of that back now. It's down to about 1088. So some of that upside, it's given up a little bit as the markets seem like they're actually, oh, wow, the broad major equity markets starting to turn red on the day. They were up 1.5% in the S&P. The Dow was up as well. Dow is now negative on the day. NASDAQ was up 2%. It's only up 0.8, actually 0.75% now. S&P is flirting with unched. Wow. So they are coming for it, hence this turn in Bitto. Bitto and obviously all the crypto space highly correlated to the major equity markets if you haven't figured that out yet. If you want to see exactly how much, go check out our TWIFO program from the end of the year last year. We break down all the cross-asset correlation. Fun stuff. Maybe we'll see if I can run those numbers for you here on the show as well to give you a sense of what's going on. Speaking of what's going on, let's see what the top positions are out here in Bitto options right now. I mentioned on our last show was the 10 strike. Everyone was fascinated and fixated on the 10 strike. The D's 10s were the sizable position. Those have obviously gone the way of the dodo now. So let's go a top 5 out here. In Bitto positions, number 5, we have about 13,000 of the March 9 puts, followed by number 4, 15,000 of the June 5 puts. Intriguing. Bitto at 5 by June, listeners. Interesting. You know, maybe we're just forgetting 10. Maybe 10's already in the rearview mirror. We're going down to 5 here. Number 3, 17,000 of the Jan 9 puts. Number 2, here we go. This is what I expected. 34,000 of the Jan 10 puts. And the number 1 size position in Bitto options right now, we have the June expiring on the 30th. So not the traditional monthlies. These are in the weeklies. The end of month 8 puts, 64,000 of those. Interesting. Are you here for a little bit of a downside in Bitcoin and indeed crypto? Are you believing what a lot of the pundits are saying, that we're going to see a broad sell-off in the markets? S&P just turned red after a big rally day here. So you think maybe this is going to be the challenging period a lot of people are predicting, in which case, if that correlation holds, might see crypto dragged down with it as well. Maybe these June 8 puts will be looking good soon. I don't know. I'm curious. What are your folks thinking about Bitto right now? Are you still selling puts on the 10 strike? Or are you maybe migrating your liquidity a little bit farther down? Are you washing your hands of it completely? Hit us up. Let us know as we keep on rolling to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, let's do it. Our first foray into the altcoin universe for 2023. Let's see what it holds in store for us. Any big shakeups or surprises? Seems like, no, we're looking at some of the, most of the same offenders, the usual suspects here, holding down the top 10 in the altcoin universe. Number 10, still Polygon, hanging out at about $7.5 billion. That's all it cost you now. We're even below 8, down to $7.5 billion in the top 10 for market cap listeners. Number 9, our old friend Doge, still hanging out there, about 10.25 billion worth of market cap. Number 8, Cardano, just a hair shy of 11, about 10.95 billion worth of market cap. Number 7, Binance USD, 16.3 billion. Number 6, XRP, 17, almost 18 billion. I think the folks at XRP would certainly love to have a lot of the regulatory certainty that our guest Christoph seemed to have in terms of regulators being fans of tokenization and securitization going forward. I'm sure XRP folks would love for that to come to pass. Hanging out right now a little bit shy of 18 billion. Number 5, we got USD Coin, 43, almost 44 billion. Number 4, BNB, 44.5 billion. Then we jump up again to number 3, it's Tether, 66.2 billion. Number 2, it's ETH, 163 billion. And number 1 right now, Bitcoin, 333 billion worth of market cap. Let's get on out to the number 2 in market cap. Number 1 in a lot of your hearts. And ETH also delivering a little bit of a early New Year surprise for you folks. At the end of our last show, a few weeks ago, it was hanging out right around 1250, 1252 to be precise. Coming in to start today's show, we're looking at 1333. So a nice little pop out there, listeners, about 80 odd handles. So a little bit of an early New Year's gift for all you ETH lovers out there. In terms of range, the low came on the same day for Bitcoin, a couple of days later. The low came on Monday, December 19th. So the week after our last show, that was about 1162 right there. So plumbing some depths there. And then the high was 1341, came this morning actually. So we're hanging out at the near-term highs right now for ETH. Not the case from a vol perspective, though. ETH, on our last show, the vol was 72. This show, hanging out at about a 55. And in terms of skew, our last show, pretty close to what we saw in Bitcoin, about a -4, -3.8 to be precise. And coming into today's show, -1.7, so pretty much cut more than in half out there as well. So both Bitcoin and ETH taking a bit of a break from the protracted negative put skew out there. OI, now this was another big story last year for ETH. ETH really loves to trade in the quarterlies. You can look at the size positions in ETH, and you know right away that the quarterlies are where the action is. That's pretty much been the case for as long as we've been really covering and running the show here, that we've seen just a ton of interest, a ton of love in the quarterlies on ETH. That's just how that product trades. So we know when December rolls off the board, it's going to hit ETH maybe even harder than it does some of the others. And that was kind of the case. We saw a ton of OI roll off the board. Almost all of it in the calls, interestingly enough. Not a ton of puts rolling off the board. We're down to about exactly 2 million calls left on Derib. That's down over a million, 1.1 million. We were 3.1 million open on our last show. The puts down to 581,000. That's down not even 200,000, 178,000. So it's down substantially, but numbers-wise, can't compete with the calls out here. They're talking less than 4-to-1 calls over puts right now, which is interesting because ETH has been hanging out that ratio for quite some time, about 3.5-to-1 or so out there, which is intriguing. And we also know one of the big stories for the latter half of last year when it came to ETH options positioning were those DEES 3000. Someone had really piled into those for size. They were dominating our top fives week after week for months. Is that still the case? Well, it wasn't just DEES, the 3000 strike in general. But we know a lot of people were playing on DEES. So I have a feeling maybe that is not the case, but we shall find out, listeners. Let's run the top 5 positions right now in ETH now that December has gone the way of the dodo, taking a lot of paper with it. Number 5, we have the 1500 strike with 100,000 contracts. That's all it costs you to break into the top 5 in ETH right now. Exactly 100,000 contracts. That's also a newcomer to our top 5. So nice to see again. I always like when relevant strikes are trading it up out there. Number 4, right behind it, we have the 1600 strike. Also a very relevant strike. 128,000 contracts open there. That's down 50,000 from this time last show. Number 3, getting back up there again. ETH had some of the more optimistic paper of the products we cover out here in terms of strike. Number 3, we have the 3,500 strike. So those are still hanging out. 152,000 are remaining there. That's down about 29,000. Number 2, slotting in there amongst the optimistic strikes, we have the 1,800 strike. That is a newcomer to the top 5 out there. And then number 1, with a smaller bullet than last time, we have the 4,000 strike with 231,000 contracts. That's down a whopping 103,000 contract listeners from our last show. So they really came for that size out of the money paper. You notice a strike I didn't say, listeners, one of our former top strikes for months, the 3,000 strike. They really came for this one. As I mentioned, I said a lot of that 3,000 paper, that seemed like it was concentrated in December. Would they reposition there after the end of the year? And the answer so far is no. The 3,000 strike has been kicked to the curb. It is down to 53,000 contracts remaining. That's all that's left on that strike. At the end of our last show, there were 335,000 contracts open on that strike, listeners. That's down nearly 300,000, 282,000 contracts going the way of the dodo. So that 1.1 million calls that they lost there on Deribit, 282,000 of them for the D3000 alone. So there was a ton of interest in that strike. A lot of folks or a lot of funds were just piling into the 3,000. Also, clearly some 3,000, 4,000 vertical paper going up. I think the reason the 4,000s are still there, even though 100,000 have gone the way of the dodo, is that there's just not much reason to take those off at this point. Not a lot of juice left there for the squeeze, so they're going to leave them and see what happens. But the 3,000s gone the way of the dodo. Also, obviously, some of that 4,000 strike paper, longer term than December. So intriguing stuff there. We'll see how long that stuff hangs around, if some of these other more relevant strikes bubble to the surface and usurp it. But either way, that was one of the big questions I had. What is the hot strike for ETH options? And it was the 3,000 strike, and not after the end of the year. That is no longer the case. But it does seem like since our last show, one of the big hot trades, hot contract, the hot strike out there right now, maybe not what ETH fans and ETH bulls want to hear, but someone's been loading up on the June 400 puts over there on Deribit. They picked up 32,000 of them not too long ago in a handful of trades out there. Those are opening buys as well. So opening on the 400 put strike, closing or going the way of the dodo on the 3,000 strike. Maybe a bit of a sea change in sentiment out there, or maybe just a couple of trades. Maybe we're reading too much into that. But either way, interesting stuff. It will be interesting to see if we start seeing the 400 strike start making its way into the top five. Right now, there are two slightly out of the money strikes there, but that's still mostly call paper that is dominating those strikes. It'd be interesting to see if we start seeing, let's say, I don't know, the 1,000 strike or even below, some of those strikes which are clearly dominated by put paper. If those start making their way into the top five, that will certainly signal a sea change out there. In terms of action, since our last show, the big day was December 19th, 532,000 contracts on the tape for ETH. That's actually respectable. I mean, that's more than we saw back on November 14th, 454,000. It's not anywhere close to what we saw on November 8th. That was 1.2 million contracts. But then again, that was immediately in the wake of the FTX fiasco. So a lot of craziness going on there. In October, we saw 600, 700, 800,000 contract days. So we're not quite there. But again, it was December. You don't expect a ton. So given that context, that frame of reference, 532,000 contracts on December 19th. That is a respectable number. Unfortunately, we're not seeing respectable numbers out there for the CME products, at least not yet. The micro ETH, which for a little while there seemed like they were starting to gain some traction, starting to put up some numbers. So far, 85 contracts this week and a whopping 69 last week. We go out to the big dog, the newest addition to the CME crypto complex, which is, of course, ETH. That's, of course, a big multiplier as well. Last week, we saw 125 going up on the tape, and this week, whopping 31. So still waiting for these to really kick off and take a bunch of you in and really start driving some paper. Let's see if some of our other altcoin friends are driving some paper here for the first show of the new year. Solana getting a little bit of an early lift as well for you folks. 13 and about a quarter on our last show, 1658, so up about almost 340 since our last show, listeners. XRP, this one again, I'm sure they would love to have the regulatory certainty that our guest expressed today. Right now, they don't have it. So they were at 37.8 cents on our last show, 35.5 cents today, so down about 2.3 cents. But for them, good old Doge taking a break to the tune of about 1.1 cents. Litecoin, 74.81 on our last show, 82, pretty much even today, up about 7.20. Cardano, 30.3 cents on our last show, 31.6 today, so up about 1.2 cents there. Polkadot, pretty much hanging out, losing a little bit, 5.12 on our last show, 4.96 today, down a whopping 16 cents. And our old friend Shiba Inu, pretty much treading water as we head on into our first crypto questions of the new year.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. It's that time of the year, listeners. It's beginning of the year. It's a time when we ask our annual sentiment polls. See how you folks are feeling on a wide variety of different market sectors. And this year, we're asking you quite simply, if you had to buy a 10% out-of-the-money call expiring at the end of the year on one of these following products/markets, which one would you choose? Gave you four choices. The S&P, SPX, so pretty much your broad equities, or your Bitcoin, kind of our surrogate for crypto there, WTI, so your commodities there, or VIX, volatility itself. This has been a hotly contentious one, listeners. We're coming into the final hour of the poll now, so we still have a little bit of time left. You folks listening live can still vote. You folks listening after the fact on the podcast, that will be too late. The poll will be expired by then. That's why you got to follow us over there at Options if you aren't doing so already. A lot of great content coming out there every day, including fun questions and polls that you folks can play along on. You never know. Maybe you win some fun prizes playing along with our questions. Right now, the winner in our 10% out of the money call contest is the broad equities, S&P, so your SPYs, your SPX, 42.7% of you choosing that. Then we have a tie for number two, 24.7% each for WTI, so crude oil, and also VIX, so volatility itself. Interesting how much those two are moving in lockstep. Bringing up the rear, maybe this will be disconcerting to some of our crypto listeners, but Bitcoin, only 7.9%, which is intriguing because this asset has been extremely beaten up, more so than any of these other asset classes here on the year. So you can maybe argue it could easily do a 10% retracement pretty easily. But no love for it, only 7.9% out there. Do you agree, disagree? Make your voice heard over there at Options, listeners. This poll, like I said, will be expired, but there'll be other fun ones up there for you folks to play along with until our next show. All right. That is going to do it for our inaugural crypto rundown for the year. Listeners, I want to thank our guest, Christoph Gugelmann from Tradeteq. Check them out if you want to learn more about all the developments they have going on their platform. It's Tradeteq.com. And of course, you know where to go. Kick the tires and light the fires on all the analytics we're talking about here on the show today. None other than Genesis Volatility, gvol.io, the place to go to kick the tires and light the fires. You can also follow them now under their new name of Amber Data, AMBERDATA. Make sure you guys have all new links to access that fun stuff going forward. But great analytics for you folks to sink your teeth into. All this stuff we touched on here and a whole bunch more, really just scratching the surface. Again, I want to thank all of you out there for helping to make 2022 such a record year. We're looking forward to another great year in 2023 and more great episodes of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.